Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. My name is Josh Lilquist, and we were covering some different topics on the last segment about it's not always just the right thing to invest, but when to invest in it. But it's kind of twofold. It's having the right asset and then when to be trading that asset. And when we talk about assets, it's stocks, options, futures, Forex. If you're in the stock market, what is that right stock at the right time? And that's called market timing. They say, oh, well, you can't time the market. Well, you just haven't been taught yet. And that's why we have investing classes local here at the Academy. Congratulations to those of you that did text in. Text the word investing to the number 210-210 right now for 2 seats for an investing class. What you're going to get back is you're going to get a text right back when you text that in. And it's going to give you an option to pick your own date. So just click the link in there, and that'll guide you to our page to click to find the date that works best for you. We do these during the week. We also have these on the weekends. So make sure to text the word investing to the number 210-210 right now for 2 seats for this investing class right here in Bloomington. Local physical place to go. We have a state-of-the-art academy right off 494 Al. So congrats to those people coming in. We look forward to seeing people coming into these classes. Al teach these and I teach these as well. So we have a good time talking about the financial markets. Now, Al, we have obviously a lot of people coming in right now that are seeking financial education. And they all have different goals, different objectives. Some are looking for income strategies. Some may be looking for retirement strategies, 401k, IRA, protecting their those accounts, especially as as Ray Dalio says, this could be catastrophic. Come moving forward here in the market. So don't be at that point where you say, "I wish I would have done something different." So Al, you meet with a lot of these people. When these people come in these classes, whether you're teaching them or you're just talking with people in just various conversations, they're telling you certain things or certain reasons why they're coming in to seek for financial education. What are you seeing as far as reasons people coming in and some of the goals or objectives people have? And then how do you help people start that process to get to that promised land that they were looking for?
Yeah, you know what? I think you can kind of cull it down to this, Josh. They want to know why there's a difference between their financial expectations and their financial reality. And the bottom line is, and the real reason is that people that are in the markets are trading like retail traders, and they don't even know that. They don't know what the difference is. And that's because they haven't accessed the right education. So Wall Street actually encourages people to be average. They encourage you to be an average retail trader, investor, where they're taking advantage of opportunities that you don't see or you don't even know exist.
What does that look like then? So if you're saying that average person, so just so our listeners understand what that is, because sometimes they don't even know.
Sure. Let's call us, we're retail traders. We're not, unless you run a hedge fund or you're an advisor, you're a retail trader. That's the public. That's what we do. We are told to do, to kind of structure our investments in a certain way that Wall Street basically needs us to do for them to benefit.
Mhm.
The average return for people over the course of, if you look at a 20 or 30-year time period, you're looking at maybe 5-6% returns on an annual basis.
As my good friend Will Ferrell said, "Whoopity doo."
So that's exactly what he would say if he was here. Over the last few years, if you take away 2022, maybe that average was a little bit higher. But what about the institutions? People know that the professional traders out there, the companies like Goldman Sachs, JP Morgan, people like Warren Buffett, Ray Dalio, they have returns that are significantly higher than the public. And people want to know why that is and if they can benefit from the same things. And the answer really is yes. But here's what happens. Here's what Wall Street has you do. They have you investing in stocks or mutual funds. What about them? They invest in stocks, but they also invest in options, the foreign exchange market, the futures market. We teach you about those things. For you, they put you in a long-term, one-directional strategy, which means the market has to go up in order for you to make any money. And you have to hold on for sometimes decades to be able to make sure you have some sort of profit. For them, they trade short-term and long-term, and they trade multi-directional. For you, they tell you disregard price. If you go into a financial advisor, they're going to say, okay, we have to get you in the market. We don't care what the price is right now. We don't care about your losses, your protection, because you're in this for the long term and the market always comes back.
And think about that for a second, Al. Okay, in everyday life, if you're going to go buy, let's just say a shirt, don't think about the price. Just go buy it. It doesn't matter. Or if you're going to go buy a car, don't think about the price. Just go buy it. I mean, it's counterintuitive to everything we do in our life.
Absolutely. Everything we do, we're concerned about price.
So why do people follow that then?
Yeah, because that's what the professionals, my fingers are going to quotations.
Yeah, for our
are
YouTube
telling-
viewers, we're seeing the air quotes, bunny ears, quote unquote, we were talking about that in the lunchroom earlier
Right.
today.
Yeah,
they say that.
Yeah, but what for you, what Wall Street wants you to do is just get in the market and stay in it for decades. And what about them? They're only in when they see value, and they get out when they see something being overvalued. They don't care what price you pay for a stock, yet they only pay what they know is fair value. And if they're moving the market, and the difference between me, say, and Ray Dalio is when if I was going to buy shares of Apple stock, I might buy 100 shares. Ray Dalio might buy 1 million shares. I'm not going to move the price of Apple, but he will. Warren Buffett will. So if those guys are moving the price of something, and what is the most important thing? If you are buying a stock, if you're buying an options contract, if you're buying a Forex contract, a futures contract, you want the price to go up. So if you could identify what was going to cause that to happen and when it was going to happen, wouldn't that be advantageous to you? That's what we've done. We've developed an investment strategy called Core Strategy that identifies on a price chart where people like Ray Dalio, where people like Warren Buffett, where companies like Goldman Sachs, where they're going to be active. When they become active and they actually put money into the market or into an asset, price will go up. When they become active and they pull money out of the market, price goes down. We can show you on a price chart with a high degree of accuracy where that is going to happen. And here's the great thing, Josh, here's the secret. Keep it simple, let them do all the work.
You go.
They've already analyzed something. If you take time to analyze and look at the fundamentals of a company, by the time you do that, and that's all public knowledge, the institutions have already probably taken their position, they have made a profit, and they're getting ready to get out just as you're ready to get in. So
Yep.
That's one of the fallacies and one of the things that people follow that inhibit their ability to have really good returns.
Yeah, that's a really, really good comment there because, I mean, it's all conditioning. The difference of expectation versus reality is conditioning the public to do certain things. You were talking about telling people to go buy mutual funds and stocks and don't worry about the price. Nobody does that. I mean, think about this for a second. Nobody does that, hopefully not, in their everyday life. But they go do that in the markets because they're told to by quote unquote, for our YouTube viewers, you can see the bunny ears, quote unquote, they. Don't be in that same boat. Do this and learn the skills yourself, but you got to find someone to teach you. That's why Online Trade Academy has introductory classes to get you involved and introduced to some of these techniques and concepts we're talking about. And if you have that goal or that financial goal, it starts with going somewhere and starting something new. So text right now, text the word investing to the number 210-210 for 2 seats for an investing class to be introduced to all these techniques and concepts. We're going to talk about these are 2-hour classes. When you text in right now, you'll get a text right back. It'll say, welcome to Investing and Trading Live, and you'll also get a link to pick your own date. So make sure to click the link. That way you can find a date that works best for you during the week. On the weekends, we also have these on the evenings. So it's your choice as far as which day that makes sense for you. Now, you were saying a couple different, you went through a lot of different topics there earlier, but to learn how to be successful or to do anything in life, one of my mentors once said, is if you have a goal or something that you want to do, once you have that goal, find somebody to teach you. Don't just go figure it out on your own. You have to find somebody that's been doing it and have them teach you how to do it. That way you don't have to go through those trials and those tribulations. And you were talking about how people buy stocks versus how the institutions buy stocks. They're buying stocks based on value, based on when it's actually cheap.
Sure.
The public is buying it just because it's every other Friday. Now, the reason they're conditioning people, I mean, in my mind, a lot of times is because you mentioned earlier, they do options on stocks, which when you tell the public to do something and they're creating volatility, there's option strategies where you can benefit from that volatility. So,
Right.
Al, let's just say somebody's looking for an income strategy and they want to use options because you can use less capital. What are some of the things that they can do to have that income strategy?
Well, you mentioned options. There are three really great assets that our students trade or invest in that give you the opportunity to have short term returns and use less money as far as your initial investment, sort of like a mortgage on a house. You're putting a down payment down basically on a big investment. And those are the options market, the futures market, the foreign exchange market. Options is a great asset to learn about because it gives you options. It gives you many choices. You can use options as a protective vehicle, which is what they were really initially designed for. It would be like having an insurance policy on your portfolio. You have insurance on your home, you have insurance on your car, but you know that you can't say 100% you're going to need to use your house insurance, your home insurance, or your car insurance. But you know 100% if you have a stock portfolio or investment portfolio, at some point in time, it will go down in value. Everybody's does. Warren Buffett's, Berkshire Hathaway, it goes down in value. So when that happens, guys like Warren Buffett have what we would consider an insurance policy on that portfolio. So as the assets in the portfolio go down, the insurance policy goes up in value to counter that. You can use options, and very simple way of using options. We talk about that in these 2-hour classes. What if you want to buy something, but you think it's a little bit too expensive at its current price? What if you could get paid cash just to wait until it goes down in value, and then you buy it at that lower value? And what if it doesn't go down in value? You just keep that money that you got in your portfolio immediately by doing this option strategy. Same thing when you want to sell something. If you want to sell it, but you think it might go up a little bit and you'd like to get more money for your investment when you sell, there's an option strategy that will pay you cash to wait until the price goes up, and then you sell at a higher price. Basically, options are paying you to wait, just to wait until price comes to where you want it to be for you to benefit. You can use options in up markets, down markets, sideways markets. And by the way, we're not trying to convince you to just use options. A lot of people, when you look at YouTube or you get newsletters, it's going to tell you or teach you how to do only one thing. So you're kind of being indoctrinated. Well, what we do is we look at you as an individual. We have access to people that trade and instruct or teach in all of the different assets. So we don't have a bias as to whether you trade options compared to futures or options compared to Forex. We'll try to find what is the best one for you, because each person as an individual, there's a best path for you that will show you how to get to the point where you achieve your goals and your objectives in the best way for you.
Al, I think the moral of the story is, and I think a lot of people listening are probably thinking about this right now too, is there's always ways to benefit your financial future. But so many people just put it to the wayside and say, I'll get to it later. I'll tackle it later. I got vacations, or, graduations are coming up. There's always something that's going to get in the way, which I don't know if anybody's ever done a retirement calculator. The longer you wait to do something a little bit different, affects you in a negative way, but you won't really realize that until it's at that time, that retirement time. And I want to talk about some of that coming up here in the next segment. But that's why we have these investing classes, Al. We've had a lot of people come to these classes lately. I don't know what it is, if it's market conditions or they just want to come meet us. I mean, that could be the fact too. But there's been
I'd like to think so, but let's be real.
That's self-proclaimed, right? But that's the great thing about this is people are looking to do better. And if you don't do different things, you're going to be in that same boat, that same retail, or that same consistent status quo. And so these investing classes, they're about 2 hours long. And I want to invite you to one of these classes. We do these during the week and on the weekends. So just text the word investing to the number 210-210 for 2 seats for this class. Most people bring their spouse to these classes. When you do that, you're going to get a text right back, and they'll say, welcome to Investing Trading Live, and you'll see a link. Make sure to click the link, and you can pick your own date for this investing class. Text investing to the number 210-210. So, Al, coming up next, I want to talk about retirement strategies. It's a big topic right now. People are looking to retire, stay retired. So let's talk about protecting and growing those portfolios, whether it's a 401k or an IRA. So stay tuned. This is Josh and Al, Investing and Trading Live.